there's a lot of, inherent challenges, that folks have when they go partner with some of those, more traditional incumbents. And it's often on the technology and like merchant experience.
Hey everybody, James Shepard here with another edition of the Merchant Sales Podcast. In today's episode, I am interviewing a longtime friend of mine, Caleb Avery, the CEO of Tilled. A fascinating interview if you want to understand where ISVs, or these vertical specific software companies, where they're at today in terms of payments. And so Caleb and I just talk a lot about the challenges that they're facing, and also the opportunity. Do ISVs represent a risk, or they represent an opportunity? I believe that they represent an opportunity. And so we discuss how to take advantage of that opportunity. And so I love what Caleb is doing at Tilled. Fantastic company, doing a great job. So I talked to him. And then Patti and I have a discussion about interchange cost. What is the future of interchange cost? Is it going to be regulated? What about these laws that are coming up in the different states where it's like, hey, you can't charge interchange on tips or things of that nature, where, even the Credit Card Competition Act. And so a lot of different legislation kind of floating around right now. So we try to cut through all of that for you and talk about that and simplify it, as well as what this means for the future of our industry. This episode, as always, is brought to you by Nativia. If you want to learn more about what Nativia has to offer, just head over to ccsalespro.com/Nativia, ccsalespro.com/Nativia, and check it out. With that being said, I want to clarify that Tilled and Caleb, although we did some consulting and advertising back about a year ago, they're not currently a paid client in any way. This is just a great interview with somebody in the industry that I really respect and admire. So with that being said, let's jump in. Hey everybody, I'm here today with my good friend Caleb Avery, CEO at Tilled. How you doing today, Caleb?
I'm doing great. Thanks for having me back on the show.
Absolutely. So, of course, Caleb's been on several podcasts. I don't know, two or three that we've had Caleb on, done some events together. And so, for those in our audience, Caleb, who maybe haven't heard your story, it's been a little while since you were on the podcast. Give us a real brief kind of just how did you end up doing what you're doing today? And then also, I'd really love to hear an update on Till, just what's been happening in the last 6 months or so, and how are things going?
Yeah, absolutely. So I started my career probably like a lot of the listeners going door to door selling payments to small business owners. And that was, I don't know, 12 plus years ago at this point. And so the world of payments looked a little different, at that point in time. And, over that period of scaling up that ISO, I started to see this trend where small business owners no longer just wanted a terminal sitting on the counter to process their payments. They really wanted integrated software that could help them do far more than just payments. And so I started doing more consulting and angel investing for vertical software platforms. And most of it was helping them get off of Stripe so that they could figure out how to, start monetizing those payments. And that consulting journey turned into me deciding to go start another business. And that was about 6 years ago that I decided to start, what became Tilled, what became PayFac as a service. And, 6 years ago, even we were a little early in that trend of, vertical software starting to take over the world. But at this point, it feels like the space is just on fire. And so the last year for us has been pretty incredible. We've grown over 500% over this last year. We've signed some major enterprise partnerships. We've had some huge upgrades on the product side, and we're super excited for the year ahead.
Love it, man. That's great. Well, that's perfect kind of lead into my first question for you, which is, let's talk about those macro trends. I mean, the last time we talked, I think in the ISO world in particular, there was kind of still this thought process of like, well, yeah, we see this trend happening, but to what extent, how far is it going to go? How fast is it going to accelerate? What are you excited about today when you look at the market in general and this idea of vertical specific solutions in particular? What are you seeing? What are the trends that are happening?
Yeah, I think the last time we chatted, we were talking about this idea of, is it an opportunity or a threat? So if I'm an
Right.
ISO in the payment space, where are we in the stage of evolution? And when you look at some of the data, Credit Suisse put out a pretty great report that said in 2018, when you looked at the breakout of ISO versus ISV payments, so how do small business owners get access to payment processing? In 2018, it was 80% to 20%, 80-20 in favor of the ISO model. And so ISO was still the predominant, way. The last time we chatted, it was probably more like, 65-35. And then the most recent data that's come out is that it's almost 50-50 in terms of the way that small small business owners are getting access to payments. And so you've got literally trillions of dollars that are changing hands between
Right.
the kind of traditional models and integrated software. And so for us, we're really excited to be enabling every part, of that journey, both bringing on direct ISVs, helping some of the more traditional incumbents actually start modernizing their technology, and then helping ISOs and agents that want to, start selling into that space to get started. So we're, overall just excited for everything that's happening right now.
Absolutely. And I'm seeing the same thing. And I think one of the follow-ups to this question that I find really fascinating is that when you look at that trend and it's like clearly, vertical specific, software companies are eating payments. Like there's no doubt about that today. I mean, it's like obviously this is happening, but I think that there can be this misconception then where you're like, okay, well, that must mean that all the ICs out there just really understand payments. 100% of their clients are using their in-house payment solution. They're monetizing payments. They understand the pricing. They're maximizing margin. And it's like when you actually get into it on the consulting side or the services side, you realize that's not the case. So I'm just kind of curious, what are your thoughts on this? Like, where are ISVs really at today in payments? Where are they at in their payments journey as a general rule?
Yeah, I would say, that couldn't be further from the truth. If I think
Right.
about my consulting experience prior to Till, that was generally my opinion, 8, 9 years ago. Hey, these guys are doing hundreds of millions in payments. Surely they figured out, how all of this stuff works. And, over
Right.
the years, as I worked with startups just figuring it out, mid-sized companies doing hundreds of millions of payments, and then companies doing billions of dollars in payments, what I realized pretty consistently across that entire stack was these guys were not experts in payments. They were experts in the core vertical that they were
Right.
operating in. Maybe they're experts in software or software, development, but it was actually exceedingly rare to find ones that really understood, how payments worked. And so for me as a consultant, there was plenty of opportunity to go out and help, these guys figure out how to price it, how to take it to market, how to support it, and then certainly with Tild, we're seeing the same trends.
Yeah, it's so fascinating, and I think you started off this conversation talking about threat versus opportunity, and I think more than anything else, I think that fact is what shifts it towards opportunity, right? Because it's
Mhm.
like if the IC's already had it all figured out, well, then what are we talking about? It's
What do they need us for?
you're right, but they don't. And not only that, I think and I'm curious to get your thoughts on this as well. Kind of just thought of this, but it's like percentage wise, when this is a good question, when you find a new ISV that comes to Tilt and they're like, okay, we want to
Mhm.
monetize payments, right? On average, what percentage of their new software accounts are actually monetizing payments with their current integration?
Oftentimes it's more like 10 to 15%. It's
Yeah.
really, really low
Yep.
adoption. And that's one of the things that they come to us, frustrated
Right.
about. And I think one of the things that's always interesting to me is when ISVs are starting that process, whether it's an RFP or they're just searching,
Right.
for a new payments partner, oftentimes their search is, hey, I want to find the lowest cost payment
Exactly.
provider. And the reality is what they're actually trying to optimize for is I want to make the most amount of money
From
on my
payments.
payments. And in
Right.
their head, the best way to do that is, hey, I want to go get, my schedule A down, as low as I can. But the reality is that's probably the worst possible way to actually achieve the
Right.
goal of I want to go, maximize my revenue stream. Because if you can take that adoption rate from 10% to 30, 40, 50%, those couple of basis points on the schedule A mean absolutely nothing, to
Right.
you because you're 5xing, the merchants and the volume that you're bringing through
Right.
the platform.
Yeah, I had an interesting conversation on the consulting side about maybe 8 months ago. Caleb, I was talking to an ISV and they were doing about that 10-15%, right? Of their new software sales were monetizing payments. And I said, let's do a thought experiment here and we'll make it a financial
Mhm.
projection. I said, what if we took that percentage to 100%?
Mhm.
And they're like, oh, well, we couldn't do that. I said, but what if we did? What if we said you can only use our software if you use our payments? And that's it. There's no other alternative. And I was like, so I said, let's ask the question. How many of
Mhm.
your sales would you lose? And when we actually went around the room, it was like probably 30%. So they were like, we'd probably lose 30% because they just would have refused to sign with payments. I was okay,
Mhm.
let's run that
Great.
projection. You lose 30% of your new sales, but 100% of the ones you do get monetize payments. And we looked at their margin, et cetera, et cetera. And it was like, oh, we would make 5 times more money.
Mhm.
And and so and they ended up not going quite that far, but it was like, oh, wait a minute. And so to your point, I think, yeah, the ISV, it's really interesting, Caleb, isn't it? The similarities between the ISO journey and the ISV journey. Like
100%.
the ISVs are just back a few years, and they're in that same thing of it's like, give me the maximum residual percentage, give me the lowest schedule A cost. And then when they actually dive in, they're like, oh, no, I need the best solutions. I need the expertise. I need the help to be able to do this the right way, right?
Yeah. All of a sudden, technology matters, support matters.
Exactly.
100% agree. They're also out there trying to sell just on price. Well, how low should I be, pricing this
Right.
to my clients? Like, no, you can actually raise the price,
Right.
from what they have, today. And I think that's another big misconception, in this world for ISVs that are just getting into,
Yep.
this is on average, they can actually charge quite a bit more than,
Yes.
their unintegrated, counterparts.
Right. Absolutely. Okay. So I want to transition the conversation a little bit here, and I want to talk more specifically about Tild and also just business model in general. So let's kind of break down the kind of key players, competitors in this market a little bit. Obviously we'll start with Stripe. I mean, that's kind of the elephant in the room. For a long time, I've been talking about kind of the weaknesses that Stripe has right now in their business model. Talk about how you view Stripe as a competitor and how Tilda is positioning itself to continue to gain market share over Stripe.
Yeah, they're definitely the 800-pound gorilla in the space, and for us, about 50% of our clients come to us from Stripe, and so we're pretty familiar, with them as a player in the
Right.
category. And when I look at Stripe, there's a couple of different areas where I feel like they fall down. From a product perspective, everybody always thinks about how great the technology is, which depending on where you are in the journey, it is pretty phenomenal. But what we see as companies start to scale and they hit 50, 100, 200 million in payments, they start to have more complex needs. They want to have different billing models. They want to have, different pricing structures. They want to change the branding on the payments. Maybe they want a different flow of funds than Stripe is willing to support. And so a lot of times we hear from these ISVs where Stripe just isn't able to offer them the flexibility, that they want from a product perspective. I think thing two is obviously pricing. Everybody wants to make more money, on their payments. And, for whatever reason, Stripe just hasn't been willing, to work with ISVs, on pricing, especially in that lower, middle market, segment of ISVs. From a support perspective, there's a lot of complaints. It's hard to get people on the phone. They're slow to respond, on emails unless you're paying for, the upgraded, dedicated,
Right.
support packages, which just adds, a lot of additional, cost there. And they're also really typically not leaning in to actually help those ISVs scale their
Mhm.
business. They're not coming in and saying, "Hey, let's help you,
No.
design a new marketing campaign. Let's
Right.
help you optimize, your pricing structures." And I think back to that point on, adoption rates, that's a huge missing piece, of the puzzle for ISVs that are choosing to, partner with Stripe.
Yeah, I think more and more ISVs are they're looking for companies, and it's interesting. Both of us kind of were in that consulting side. I still do that a good bit, and it's like, you know, I think that these ISVs want that, but then I
Mhm.
think they also realize pretty quickly the limitations of that because
Mhm.
the consultant can say, well, it should work this way. And it's like, well, it doesn't. So what are you going to do about
What do
that?
I
And it's
do?
like, nothing. I don't work at that company. So, so I think there's maybe an integration of services there where that you found where it's like, yeah, you're able to go out and provide them the expertise, but you're also able to actually be the one providing the service so that when a pain point or a friction point comes along, it's like, yeah, you're right. That does suck. Let's fix that, So I don't know about you, but it's like it's nice, when you're in a position to actually solve the problem. That's always a good position to be in.
Yeah, 100%. I think they're turning to us because they're lacking that expertise,
Right.
in payments. And so when we start talking about, hey, you guys are struggling with, Visa downgrades on your interchange report, they're like, I don't know what that means.
Right.
What
Right.
what do I need to do, to fix that?
Yes.
And, if you have somebody that can help you, that's a much
That's a
better
win.
place to be.
Okay, so we talk about Stripe. Now we're going to kind of go to the other extreme, right? So we have the like super modern, incredible API, really, really easy to use, but you can't make any money and they don't have any expertise to provide to you. Well, then we go to the other extreme, which is legacy. I would mention Card Connect probably as the
Mhm.
leader of this pack. But there's a lot of people that are still integrated with old legacy TSYS, WorldPay, Fiserv, whatever. And so how do you view them and kind of what they're doing in the IC marketplace and how do you position, as pulling clients from those legacy providers.
Yeah, I think a lot of those, legacy solutions end up being some of the folks that the ISVs turn to when they're thinking about, leaving Stripe. And the allure oftentimes is really the pricing. Hey,
Yeah.
I can go from, Stripe making, 50 basis points to, all of a sudden WorldPay's offering me 3 cents and 3 basis points. This sounds, incredible. I'm going to make all of this money,
Right.
on payments. And I think where a lot of these guys struggle when they partner with some of these traditional incumbents is on the technology and the merchant experience side of things, where, one, the upfront integration takes way longer, than they ever envisioned, because you're integrating into technology that's 10, 15, 20, years old. They lack documentation. The certification process is messy. Oftentimes the actual feature sets don't match up to what they had, with Stripe. And so their overall product ends up taking, a step back. And then from a merchant, onboarding perspective, it's often a night and day experience from what they had, with Stripe, which there's pros and cons to both approaches. But oftentimes the
Right.
ISVs are really complaining about, hey, my merchant had to go sign, a PDF, application. The onboarding process, took a week. They asked for all this documentation. So I think there's a lot of, inherent challenges, that folks have when they go partner with some of those, more traditional incumbents. And it's often on the technology and like merchant experience
Yeah.
side.
Yeah, yeah, I definitely agree with that. Yeah, it's a challenge. I think too the ISO agent community just really has this not nothing really their fault, but they just don't have any context for the developer experience and how
Mhm.
much that plays into the decisions that are made at these ISVs. They're looking at, they have 47 features that their clients want them to build, and then they have this payment integration. And it's
Mhm.
like, the developer's like, well, good night. If they look at the documentation, you want me to integrate with this, it's going to take me 3 months. And it's like,
Mhm.
or I can do a Stripe integration, it's going to take me 3 days. And so they say, well, we'll worry about that later, But then when they get to that later moment and they're like, well, wait, now we're losing millions of dollars because we went with Stripe. And then a lot of times they feel like, well, that's the only option. So then kind of in comes, Tilde, leading the pack. You have your Phoenix, Payrix, the newer ones. What's the one? Was it Rainforest, I think, or some one of those. So the newer ones, right?
Rainforest.
Yeah, coming out. A great name for a payments company. Everyone knows exactly what that means, but we won't go there. But yeah. So when you look at kind of what's happening, now, and you look at like the Tilde model, what do you see? What are the strengths of it? How are you positioning yourself now that you are, a little more, even 2 years ago? I mean, it wasn't a very crowded space in my opinion. Now
Mhm.
it feels like it's getting a little more crowded. How are you positioning yourself in this new kind of reality?
Yeah, I think when we look at a lot of the new entrants that have come into the market, outside looking in, it's starting to look like a more crowded space. But I think in practice, what we're seeing in the market is that each one of us are identifying different segments of
Yeah,
the market, whether that's specific verticals that we have, better feature functionality, that's suited for, or size of ISV based on the sophistication, of
yeah,
the product set. It could be different risk tolerances based on the sponsor banks, that we have available. It could be geographies where, we operate in both the US and Canada. Very few of our competitors actually operate, in Canada. And so when you've got,
yeah,
ISVs that have, business in, multiple countries, it's actually a very short list, of people
right.
that we're really, competing against. And I think for us, we've started to figure out that our sweet spot is a little bit larger in terms of the ISVs, that make sense for Tild. And so over the last year, we've actually like 4x the average size of the
Mhm.
ISVs that we've been going after. And as you start to, inch up into that kind of mid-market, lower
Yeah,
enterprise segment, the margins are a little bit lower. The ISVs are a little bit more, demanding, but there's actually less competition because they're so demanding
yeah,
on all of the feature functionality that's
right.
required, to be able to service, those clients.
Yeah, which makes sense. You guys are, you've been building your tech stack now for what, 5, 6 years. So now
Yeah.
you kind of mature to that point where it's like, oh, when somebody makes a request, it's probably not the first time that you've heard that request. So odds are you already have that, which is a great
Yep.
place to be. You know what I mean? That's always really good. Okay, so before we end today, I want to talk a little about Tilt specifically. So let's start with the
Mhm.
ISV. So we do actually have quite a few ISVs now that listen into the podcast. Chief payments officers, that type of thing. So tell them a little bit more about what's the 60-second elevator pitch of Tild, and then where should they reach out to learn more about actually working with you guys on the monetization side.
Yeah, absolutely. When I think about where Tild comes in the mix, I feel like our technology and product offering is really what separates us, from the pack. And so for ISVs that are interested, one, checking out Tild.com and looking at the features that we have available on the platform, I think is a really good place to start. Because to your point, 6 years in, we've built a lot of
Right.
cool stuff. And then, if you really want to, take a deeper dive and you're more on the technical side, docs.tild.com is one of my favorite places to go spend time. It's an incredible developer experience, and I think really, sets ourselves apart from the pack.
Yeah, that's great. And then what about the agent ISO that is saying, yeah, I see this trend. They want to aggressively go after the ISVs, but they don't have that tech side. So they're not looking to like finish it out, do the integration and all that. They want a partnership in that way. Tell a little bit about, because we didn't really talk about that today. Talk
Mhm.
about how that works, and then where they could go to learn more as well.
Yeah, absolutely. I think one of the things that a lot of people don't know, about our business is that almost 50% of our ISVs come through our referral partnerships, be that with individual agents, smaller ISOs, or even some of the larger processors in the space. And so we're definitely a referral partner friendly company, here at Tilt. And the idea is if you don't want to go spend 6 years and tens of millions of dollars building out the technology to be able to onboard ISVs, come to us. Bring the deals over to Tilt. We can help you close them. We'll help them get onboarded. We'll help them scale. And the reality is you make a lifetime residual on every merchant, that those ISVs, bring on board. And so, it's a win for the ISVs. It's a win for you. And, we're here to help you scale that part of your portfolio.
Yeah, and I think what's interesting, I could say from experience is that, there are a lot of good processor agnostic solutions out there, but the problem with that is if you're really going to go after ISVs, especially serious ISVs that are doing some kind of volume, although really the smaller ones have almost bigger issues than the larger ones in this area, but trying to separate processing from tech, very difficult. And
Mhm.
you're going to create a lot of pain points for yourself because there's just a lot of things that go into underwriting and things that go into processing the payments and, AVS verification and whatever it is. There's a lot of payment specific things where, again, you get yourself in a position where you're presented with a problem and you don't have the control to address that problem. And so I think there is an allure to, hey, I can like kind of piece together, this ISV solution. And even piecing it together, if you piece it together correctly, is very, very expensive and time consuming. But at the end of the day, we're all piecing things together to some extent. We all have these like legacy rails that we're working on and things, but it's just not a great way to go about it. And so, especially if you're new to it and you're like, yeah, I want to go get my first ISV. Well, let me recommend that you don't do that on your own. Find a good partner like Tild and bring those deals over. So, Caleb, it's always a pleasure having you on the podcast. Really appreciate you taking time to share your insights with us. My last question is for those who are listening right now, specifically the ISOs and agents, right?
Mhm.
What do you want to say to them? Where it's been a little while since we had you on the podcast. What is your final kind of word of wisdom to them as they're looking at seeing a big change to their kind of reality? What is your word of advice to them?
Yeah, I think it goes back to what we talked about earlier on in the episode that the opportunity right now is just incredible, in this
Yeah,
market. And so when you think about the idea that there's trillions of dollars that are changing hands, like this is the time to capitalize on this opportunity. I know from my prior ISO career, the years that I made the most money was when there were big shifts that were
right.
happening in the industry, whether it was the EMV shift or the Amex OptBlue, shifts. But where there's change in the market, that's where there's opportunity for you to really be able to go out and make money because small business owners are looking,
Yeah.
to make a change. And so if you are, an agent or an ISO that's thinking out, hey, I want to be in this business for the next 5 to 10 years, where should I be spending, some of my time leveling up my skills? If you can really, figure out how to educate yourself on the ISV model and this space, that's what's going to put you ahead,
Yeah.
of your peers, over the next couple of years.
Yeah. Good stuff. Caleb, thank you so much for taking time to be with us today. Really appreciate it.
Awesome. Thanks so much, James. Really enjoyed it.
James, interchange laws are making headway in the states. You know, to the list of states where interchange assessments on tips and tax and the tax portion of sales may be soon prohibited, you can add Washington State and Maryland.
Wow.
It, yeah, and of course we've already, it's been considered in Florida, it's been considered in Pennsylvania. It just starts adding up after a while. In
Right.
Washington, the state Senate Labor and Commerce Committee just held a hearing on legislation that would do just that, and if approved by both houses of the state legislature, the bill could become law by July of 2026.
Hmm.
A hearing was also held in the Maryland legislature where State Delegate Todd Morgan, a Republican, introduced the legislation.
Hmm.
Similar legislation, the Interchange Fee Prohibition Act, was already signed into law in Illinois, as we know. It was set to take effect July 1, 2025. However, back in December, the act was challenged in a district court where the judge issued a preliminary injunction against enforcing it.
Right. We knew that
Uh,
was coming.
we knew that was coming, but which is why it surprises me that other states are sort of following down that path.
Yeah,
Uh,
well, and I think isn't it, it's kind of like this big push right now in terms of, there's the whole, Trump is talking about no taxes on tips,
right.
and so I think there's kind of a political resurgence around, helping kind of labor in this way of like let's reduce junk fees and costs, but I think that's unfortunately paired with like zero knowledge of how the payment industry
Exactly
works.
what I was going to say. Like they don't know how it works.
Right.
The Washington and Maryland laws are modeled on the Illinois law, and they're seen as, what we expect to be a flurry of legislation, just like you said, that is, on tips, on, taxes, anything that it's like these like very small things, what seem like very small things until you get down
Right.
into the mechanics of it.
Right.
Opponents have lined up on both sides of the legislation. Retail groups, including the National Retail Federation, National Association of Convenience Stores, Food Marketing Institute, Food Markets Marketing Industry Association, have all filed briefs in the Illinois case urging the court to put a halt to the law. Conversely, the Electronic Payments Association, and the ETA have filed briefs in support of the injunction, as did the Office of the Comptroller of the Currency,
Hmm.
which argued that the legislation interferes with the uniformity needed for a smooth functioning of a national banking system.
Right.
It's worth noting that the Illinois Act also restricts banks and other entities from using transaction data for purposes other than processing transactions, which could throw a wrench into efforts such as fraud and analysis and other things. It's those
Right.
kinds of parts of this legislation that I
Yeah,
think people really,
I
they
agree.
just don't think about.
Yeah, I agree. And honestly, Patty, and I've been seeing this for several years, I guess now, but I just get this feeling that I don't think that's a practical implementation. I don't think that's ever going to happen exactly that way. I think what's going to happen is the courts are going to block that, but the idea is going to be there's this growing legislative kind of inertia to
Mm-hmm.
say, or momentum, I guess is the right word actually. This momentum of saying interchange costs are too high.
Right.
And I think that the result is going to be America following suit to every other developed country in the world, and they're going to be regulating interchange, which we already have with debit, and it's going to be those debit costs are going to come down, and there's going to be a new law regulating card processing because you have all the things Durbin has done, and I think that what's going to happen is I think lawmakers at the higher level are going to start to realize that there's growing discontent around the cost of swipe fees, card processing, whatever they think it is. And at the same time, they're going to understand there's like massive complexity with trying to do any of these things of, well, let's introduce competition into it and add a network, or let's split off a portion of the tip part and not charge interchange on that. And they're going to realize these
Right.
things are going to get held up in court forever, and they're
Yeah.
going to say, well, hold on, why don't we just lower the cost of interchange? And it's like, yeah, that's prop. So it's like, I'm not a fan of that, but I kind of feel like that's where we're headed.
It also reminds me of something that happened back in, I think it was like the early 1980s. Everybody started looking at, it used to be you could deduct all the interest payments you paid on everything, on your
Yeah, yeah, yeah.
mortgage, on your
Yeah, yeah.
car,
Right.
and you know legislation was introduced. We're going to do away with all that. Well, of course they didn't do away with all that, but they kind of like chipped away at all of that.
Right.
And that's what I see happening with this is sort of a chipping away, which is kind of what goes to what you were
Right.
saying. But
Right. Right. But it's
but
like but I think actually it's interesting. I think it's almost like these are like attempts to chip away at it,
mhm,
but it's almost like they're realizing you can't chip a little piece off. It's like a big block. It's like there's payment processing. it's like this archaic thing that's been around forever and you can't chip at it. It's almost like
Like cutting a diamond.
yeah. It's like, well, you just no, you're gonna have to actually like chop this thing and say it has to be lower. Like, and it's interesting because that is actually ironically the easiest implementation, right? It's like, well, we don't like the cost of interchange, so should we start not allowing it on tips? Should we add another competitor to see if that will fix the problem? And it's like, well, the easiest thing is to say, hey, banks, you can't charge that much for interchange. And they like, okay, like that could be implemented in a month.
Right.
Everything else could be implemented in a decade if you're lucky.
Right. And like take for example the Credit Card Competition Act. It would take at least a decade to
Absolutely.
build another set of rails.
Exactly.
Easily.
Yeah, exactly. And it would take that long for Visa to fight it every step of the way, and they
Right.
would have great justification for that to say, look, you're literally hurting the potential fraud detection, like you mentioned with this law. And there's a lot of legitimate technical constraints and arguments to be made versus a law that says all credit card interchange has to be lower. It's like, well, you can't, there's nothing you could fight that to say it's anti-competitive or something, or it's a violation of our free speech to compete or whatever it is. But that's a simple argument. It's a simple decision by the courts. I don't think
Right.
the courts would side with Visa on that. They'd say, no, it's a new law. Like, what do you want us to do about it? We're here to enforce the law. So
Right.
it just wouldn't go anywhere. And I think that's what's going to happen. So
Yeah, yeah, and I think it's going to play out over the next several years. I don't think we're going to have a quick resolution to this.
oh no, I think a couple years would be a quick resolution, right? I think we're probably still in that 3 to 5 year range before we
That's what I'm
really
saying.
see
Yeah,
something,
we're not
you
going to
know,
have a quick resolution.
right,
It's going to take
right.
several years. Yeah,
I agree.
agreed.
So yeah,
Okay.
well, as always, thanks for keeping us up to speed on all this stuff, Patty. We appreciate it.
Yeah, I'll keep on following it.